Hello guys, let's slow this down and read the market properly. This is OTC, so every move needs patience and confirmation. Price already made a strong push, but instead of continuing cleanly, momentum starts to fade. That's my first sign to stay calm and wait for the reaction. Alright, here I'm looking for an up trade. Price already made a strong move down, but now that move is losing strength. You can see the candles getting smaller and the market starting to hold this lower area. In OTC, when price fails to continue, it usually reacts back. I'm not guessing, I'm waiting for this confirmation, and that's why I'm preparing to take an up trade. That's a clean profit. The reaction played out exactly as expected from this lower area. Price gave the pullback, momentum slowed, and the market respected the level. That's why waiting for confirmation matters, especially in OTC. Now after that reaction, I'm shifting my focus. Price has pushed back into the previous area, but this move up is not strong. You see the candles losing follow through and struggling to continue higher. In OTC, this kind of move often turns into a short retracement, not a full reversal. The level above is acting as a barrier, and price is starting to hesitate. That's why I'm preparing for a down trade here, based on structure and slowing momentum, not prediction. You can see now the market doing exactly what was expected. After failing to hold above this level, price starts drifting back down smoothly. There's no aggressive movement, just controlled reaction. This is why timing matters more than speed in OTC. Once the level is respected and momentum fades, the market doesn't need to rush. And that's the expiry. Clean execution, clean profit. No forcing trades, just waiting for the market to confirm and doing the work. The move up is weak and the level is holding. Hesitation usually leads to a reaction. That's why I'm taking a down trade here. We've secured the profit here. Now the most important part is not the win, it's what we do next. After a good trade, I always slow down and reassess the market. There's no reason to jump into another position immediately. Overtrading is how profits get given back. OTC needs patience. The market will always offer another opportunity, but only if the setup is clear. If there's no confirmation, we simply wait and observe. Trading is not about being active all the time. It's about being selective. That's how consistency is built. Alright, here I'm preparing for a down trade. Price already made a strong push up, but that move didn't hold for long. You can see the market quickly losing balance and starting to shift direction. The candles are getting stronger to the downside, and there's no clean continuation upward anymore. In OTC, when price fails to hold higher levels like this, it usually means a pullback is coming. I'm not chasing the move, I'm reacting to the structure. Momentum has already changed, and the market is respecting the downside. That's why I'm taking a down trade here with control and patience. That's a clean win. The market respected the structure perfectly and the timing did its job. No rush, no overtrading, just waiting for the right setup and executing with discipline. This is exactly how we trade every day. Calm analysis, clear entries, and controlled risk. If you want to learn this trading style properly and trade with me, make sure you join my Telegram channel. I share real setups, explanations, and live sessions there. Link is in the description. Here's something important to understand about the market. Sometimes price moves up with one strong candle, but that doesn't mean direction has changed. That single up candle can be misleading. It often appears suddenly without follow through, and that's where most mistakes happen. The market likes to create quick moves to test patience. In OTC especially, this kind of candle is often a fake move. It looks convincing for a moment, but when the next candles fail to continue, it shows there was no real strength behind it. This is why waiting is important. Instead of reacting to one candle, we watch how price behaves after it. Confirmation always matters more than speed. The market rewards patience, not excitement. When a move is real, it doesn't need to rush or trick anyone. So at this point, I'm focused on the overall structure. The market is clearly moving downward with lower highs and lower lows. Price tried to push up with a small, bullish candle, but notice the reaction, it didn't break structure. There's no strong continuation and the candle gets rejected quickly. This kind of move is important. It looks like a push upward, but in reality it's weak and short-lived. I'm not reacting emotionally, I'm waiting for price to show me it cannot hold above this level. Once that rejection is clear and the momentum stays weak, this is W. Here I'm comfortable looking for continuation in the same direction. So here, based on structure rejection and momentum, I'm confident with a downside continuation. So we won that trade cleanly. Now on the very next candlestick, I'm not rushing, I'm rechecking the same structure. Nothing has changed in the market. Price did in T break above any important level and it didn't hold after that small pause. That next candle is just continuation, not a reversal. When the market pauses briefly and then respects the same direction, it usually means momentum is still active. I'm not entering because of emotions or because the last trade won. I'm entering because the structure is still valid and the market hasn't given any reason to switch sides. That's why this second down trade makes sense. It's simply following the same flow, not forcing anything. Once profit is secured again, we stop and observe. No chasing, no overtrading, just clean execution. So we made profit on this trade and the candle ended in a doji. This win is a good example of why timing is very important. Even when the candle closes as a doji, correct entry timing can still secure profit. A doji shows hesitation in the market. It means price is pausing and deciding what to do next. Because of that, after a doji we don't rush. We wait for the next candle to give proper confirmation. This is how we protect profits. Timing first, patience second, execution last. After the doji we waited and didn't rush the market. A doji means hesitation, the market pauses and decides the next direction. Now after that doji the market T. Read to shift slightly upward, showing early confirmation. This small shift tells us that the previous pressure is slowing down. That's why here I'm going to take an up trade, not because of emotion B. Because of confirmation after hesitation. Wait, confirm, then execute. Timing is everything. If you enter too early you lose. If you wait for confirmation, you control risk. Alright, we won that up trade. Now you can see the market is becoming unsure again. Candles are getting mixed, there's no clear direction right now. This is the dangerous zone, when the market is hard to predict, so instead of forcing another trade, we wait. We always wait for a proper execution plan or a clear trend to form. No overtrading, no emotions, patience protects profit. Remember, not trading is also a position. You can see the market tried to move up slightly but it failed to continue. That upward move was weak and didn't have follow through. Right after that, the mark T started respecting the previous downward structure again. The candles are closing lower, showing the pressure is back on the downside. This is not a random entry, this comes after patience and confirmation. That's why here I'm executing a down trade, aligned with the short-term direction. This is exactly why we wait. Not every candle is tradable, only the clean ones. And that's another quick profit. No rush, no overtrading, just clean execution. We waited, we analyzed, and we entered only when the setup was clear. This is how consistency is built in OTC markets. Patience first, profit follows. So here the market was already moving down. This small green candle didn't mean reversal, it was just a weak reaction. The structure was still down, so I took a down trade here and we secured profit. After that we didn't rush. The market formed a doji, which shows indecision, so waiting was important. When the market tried to move slightly up after the doji, it wasn't strong. Timing matched. So I took a quick up trade and locked another win. After that the market became unclear again. No clean direction means no forcing trades. Once price came back to the same area and failed to move higher, the down move aligned again. That's why I took another down trade, and we closed it in profit. This is why timing and patience matter. We trade only when the market gives clarity, not emotions. So that's it for today's session. Clean analysis, proper timing, and disciplined execution, that's how we trade. If you want to learn this step by step and trade with proper guidance, join my Telegram channel, Notorious Trader Quotex. I share live sessions, market breakdowns, and proper execution plans there. Link is in the description. Trade smart, stay disciplined, and I'll see you in the next video.